Our first session today, Navigating the Crypto Landscape, Safety, Risks, and Regulatory Regimes, is our keynote presentation by Louise Abbott, partner at Keystone Law. Welcome, Louise. Louise is a distinguished legal expert in civil fraud and commercial disputes. Her insightful session will be exploring the safety of cryptocurrencies and the risks associated with the sector. I'll hand over to you, Louise, and Denise.
Hi everybody. Hi, thank you for having me. Looking forward to today's session. So I think, Denise, you've got some slides for me. So if we could have those on the screen, that would be great for people to follow me through. So today's talk, what the areas I wanted to cover this morning or this afternoon is whether crypto is safe. Or I'll talk to you a little bit more about what that means, what the risks are associated with the crypto sector. Denise, I'm on the second page, please. The court procedure, recovering costs, and in particular, the FTX scandal. So what happens when crypto goes wrong? And then that leads us on to why it is important to choose the right regulatory regime to invest in, whether you're a private investor or whether you are a corporate or fund manager. And then we'll have a quick look. We haven't got much time this morning, but a quick look about what regulatory regimes are currently in place for key jurisdictions and what that might mean for you and how that can work for you in your business going forward. So very shortly, Mark very kindly introduced me, but I'm essentially a crypto lawyer, and I spend my time, I'm based in London, I'm a qualified lawyer in London, but do spend some time out in Gib throughout the year. I've got various clients out there and do some crypto work over in Gib. So I can speak about Gibraltar as well as the UK and other jurisdictions as we go along. So I've been practicing law for about 20 years in the fraud space, and then in crypto, particularly the last sort of 5-6 years, very heavily in crypto. And so that is really all I now do. So what trends do we see? I've put the UK trends here, but they will obviously not be the same across all jurisdictions, and Gibraltar particularly is one of the safest jurisdictions, which I'll come on to without giving you any spoilers. But it's important, without trying to frighten anybody, that we understand the risks in the crypto sector. Because if you understand the risks, you can make sure you get it right at the beginning and going forward. So, a staggering figure of over 20 billion was involved in illicit addresses a few years ago, and that figure continues to rise. This year it will be significantly more. The data is telling us that younger people, 25 and under, are most targeted for crypto. Although my personal experience is that my case is the people I see involved in crypto and in crypto fraud, it ranges across all different age groups, so for different reasons, and I'll come on to the types of scams that I see. But it does affect everybody, or can affect everybody. There's a 30% year-on-year increase in crypto fraud, and as I said earlier, my practice is over 80-85% just dealing with this type of work. So it's very busy and it's very prevalent. So it's really important that we understand it properly, all the risks. And the UK government issued a statement a while ago talking about how the UK are going to tackle fraud, not particularly with a focus on crypto, but it mentioned that 40% of all fraud is crypto-based, and 1 in 2 people will be a victim of fraud at some point in their life. So it's really important that we do understand the risks and that we can make steps to make sure that we're not in that group of people. Moving on then to blockchain and exchanges. Most of you will understand crypto and will understand what it is and how it operates. But the blockchain is essentially, as I said here, is a set of blocks connected to allow the transactions to flow and to be independently verified. And the exchanges effectively act as the equivalent of high street banks in terms of allowing investors to buy or sell products, and obviously FTX being the major one recently in the news, although the news tends to change all the time. And actually, I've put Binance here as an example, and they're in the news probably more often at the moment for equally as bad reasons, I would say. Moving on then to risk and how we get people get into this mess. And I've just put some examples up here of the type of things that we need to consider really when it goes wrong. And part of that is, we need to understand about law enforcement. We need to understand how quickly we've got to act, what we've got to do, and what options there are for people that have lost money through crypto. You've got the law enforcement side of things, but you also have civil recovery, which is most people's agenda. How do I get my money back if something goes wrong? Am I protected? What jurisdiction have I invested in? And what does that jurisdiction offer me in terms of a recovery process, or ideally protecting you from the fraud in the first place? So the next slide just gives you some information about what we would essentially do, how we would start that process. So we've got the investigation and tracing. A report will have to be undertaken to identify what's happened to your money. So when a client will ring me up, they'll come to me and say, I've lost X amount of pounds, hundreds of thousands, millions, whatever it might be, pounds or sterling or whatever currency it's going to be on. Now, the first thing I need to do is, before I can give any legal advice, I need to understand where the funds have gone. Is it still on the blockchain? Can I find it? Is it in a wallet that's accessible? Is it through an exchange which I can attack? So the very first thing that needs to happen is we need to conduct an investigation. And there are professional individuals, companies out there that offer that. And obviously I work very closely with those people. And they will prepare a report essentially showing what has happened. So it will be detailing what's happened to the fraud, which will help me to prove to the court what's happened, but also where is your money and what's happened to it, which jurisdiction is it in, if it can be allocated to a jurisdiction, or with the obvious challenges that crypto face. Next slide, please. So what happens when we can identify where the money is? Now, assuming we can find the money or trace it, we then have an opportunity to recover it. That applies in a number of jurisdictions across the world. I'm focusing here on the jurisdiction in England, which is also applicable in Gibraltar. But each jurisdiction will have its own recovery process. But essentially, if the money can be located, you can just ask for it back, but you're not going to get it back. So even just as short a time as just a few years ago, I was in a position where, having had a number of contacts with the big exchanges, I could ring up the exchange, prove the fraud by way of disclosure of documents or engage in some correspondence with them, and indicate that unless they returned it, we would go through a court process. And 9 times out of 10, the exchanges were releasing the funds back, because it's usually not the exchange which is guilty of the fraud. They happen to facilitate it most of the time. So they would often just return it and have those conversations internally. They've now got to a point, and have been for at least a year or 18 months, where some of them don't engage at all, or if they do engage, they will say, we're not doing anything without a court order. And there's 2 reasons to that, I think. Firstly is data protection and the issues that they would have with their own client if they return the funds in error. But more importantly than that, and I think, is the fact that they are just absolutely inundated with people alleging fraud. I mean, hundreds of thousands of these things happen all the time. So that mainly is the reason why we can't, why they don't give it back. So we need a court order to recover that, which means that for an individual who has lost funds, you need to sue the fraudsters, which we now can do even if we don't know who the fraudsters are. So you sue effectively, it's called a persons unknown, but you sue the fraudster and you serve the claim on the fraudster. Now, if we don't know who they are, one might question how we do that. But the way we do that is we ask the court for permission to do this. And the last few cases, I've airdropped the court proceedings into the various fraudsters' wallets. So although I don't know who the fraudster is, who the individual is or corporate is behind a wallet, I can serve court papers on them by airdropping papers into wallets. So it does bring it to their attention. Now, in all of my cases, bearing in mind I've been doing this a long time, not one single fraudster has ever defended the case. So it is usually a number game for these guys. They are committing fraud on a mass scale, serious organised crime operating out of various parts in the world. And if people bring these types of claims, they're not really that interested, so they don't engage. And actually, that's much more helpful for my particular client. So if they don't respond to the claim, we can then effectively just go straight to court and get judgment. So we bypass all the hassle that you'd expect in a normal claim, where you'd have to provide more evidence, you'd have to give witness statements, you'd have to go to a trial. All of that is skipped, and you can obtain judgment fairly quickly. And when I say quickly, it's probably still looking at 4 to 6 months to do that. And once you have a judgment, you are then able to serve that judgment on the exchange. Excuse me, serve the judgment on the exchange, and then the exchange will comply with that judgment and return those funds to you. Now, going back a step when I mentioned the investigation process, the importance of highlighting where the money is because we need to know that there's money there if when we serve the exchange that they're going to return the money. It's no point us getting a judgment, we serve the exchange, and actually the money's gone, it's dissipated, the fraudster's taken it out. Because of course, the minute we serve those proceedings, i.e. by airdrop, into a wallet, the very first thing they're going to do is say, well, I'll take it out and move it. So before we serve them, we often obtain what's called a freezing injunction. Sorry, I've got a frog in my throat. And a freezing injunction effectively freezes that money, so ring fences the money so that the court, so that the exchange is legally obliged to freeze that money and not allow it to be moved. So once the fraudster knows about the legal proceedings, and if they were to do what I suggest, which is go straight to their wallet and try and move it, they are blocked from doing so. So there is a procedure in place across many jurisdictions which will allow an individual to freeze those funds and go through a court process to get it back. The difficulty, of course, with that is that takes time and money for those people that have lost their crypto. So you never want to be in a position where you have to go through this process. It can be fairly expensive, and you have to, of course, find the money and freeze it before it moves. So obviously time is of the essence. Next slide, please, Denise. Flicking through there. I just wanted to give you a few case examples, just to give you some ideas of the types of frauds that I'm seeing coming across my desk, and they're really varied. So I had one, I've got one where it's a private individual who has used effectively their pension, fairly wealthy, and they have invested money through a fake or a bogus platform, and they are in constant communication or regular communication with a platform and have been for a period of about 3 or 4 years. And they have invested about 8 million over that process, never tried to withdraw it, haven't really questioned it. What's happened is they've got, I'm sure some of you will be well aware of what these fraudsters do, but they essentially download a fake app onto the victim's phone. So when you the victim, are investing your £10, £100, £1 million, you will see that come up. You'll check your phone and you'll see your app, and it shows that your money's gone in, and you'll see over time, and you'll see that your investment is going up and up and up, and that will obviously be good news for you. Now, if you see your investment going up, you start to think, well, it's safe, it's legitimate, I'm okay, and you continue to make those investments. And if you don't try and withdraw it, you generally don't know, you're none the wiser. But the reality is that platform or that app that you've got is just not true. So it's that the fraudster will go in and show a graph going upwards, but that's no reflection on your fund or your investment. What's actually happened is the fraudster just immediately withdraws the money that you or the victim has paid and puts it onto in he or her own wallet and moves it around the blockchain until they're ready to convert to fiat and withdraw, obviously. So that's an example where, it's somebody wealthy but has no experience of investing in crypto and has used a platform, an individual trader. There's romance scams, which you may or may not have heard of. You may recall that Netflix did the Tinder Swindler, which I don't think was crypto. I think it was fraud, but that is exactly the same thing that happens through crypto. So I've got 2 or 3 clients at the moment who are all victims of romance frauds. They hook up with whoever they like on Tinder, they like the look of. Needless to say, the person that they're talking to is not the image in the picture that they're seeing. And within days, they are convinced that the way forward is to invest in crypto, and money is extracted very quickly. So often, no one ever meets these fraudsters, even in the context of a romance scam, in crypto. So they are convinced or coerced into investing into money, I guess, with the long-term view that they're going to be entering into a relationship with this individual. They build up trust with this individual, and hundreds of thousands of pounds are parted with on a daily basis through romance scams. I've had there's a very well-known case where a farmer was involved in a crypto scam. That was multi-million-pound scam. That was against Huobi, and a judgment was obtained, and Huobi paid the judgment. So I've mentioned elderly couples who invest their retirement funds. We've also got the business transactions. So we'll have business A and business B. The most common way in which a business is defrauded, or the most common way that I see it, is when business A is effectively looking to raise funds or investment into their business. So I've had 3 cases very recently that all have the exact same MO, and it's that they go out pitching to people. Look, it's common knowledge, you're looking to raise funds, looking for an investment, and what happens is that they are approached either through a third party, sometimes people purporting to be lawyers, a third party convincing them that they are willing to invest. They don't do any due diligence. There aren't any genuine lawyers involved in the transaction. And what happens is that the fraudster will often say, look, I need to understand your business is good for the money, and effectively convinces them to do a crypto transfer onto a nano ledger, which is often seen to be the safest way of moving funds in this space, because obviously it's so well encrypted. And then what happens is that during this meeting where the funds are exchanged, and it is a meeting face to face, an individual, a director, transfers funds onto a nano ledger. The fraudster is sat there with a secret camera in his or her jacket, filming the password being entered, and then immediately leaves the room, excuses themselves for a toilet break, transfers the money straight out of the nano ledger, and they never go back into the meeting room. And that's happened, as I said, that's happened on 3 different cases in the same jurisdiction, actually, in the last 6 months. So that's a new kind of scam coming through. So businesses are also connected with it. And then FTX, of course, is worth a mention as case examples. Different kind of fraud. It's not your traditional scam in the sense that I've just talked through those examples, but the FTX saga is, in my opinion, without doubt, a fraud. I know that's yet to be proven, but we've all seen the very serious charges against Bankman-Fried and others. But that is an example where, because crypto is not regulated in the jurisdictions in which FTX traded, they were able to conduct themselves as they saw fit. There were no regulations, no compliance issues, and as a result, the business has clearly suffered, and it is now in administration. And that, I'm acting in that case for lots of investors, and the liquidator is still knee deep in investigations. And for those of you that have been following it, it's still going to take some time to unravel. But that is a classic example of when you are considering either setting up a business in crypto or looking to invest in crypto, what is the regulatory regime like for you, and where you're going to invest. I've covered a bit of FTX there, talked a bit about the collapse and the bankruptcy. I'm conscious of time, so shall we move to the next slide? again, I've mentioned already, it's so important that you as an investor, or you as a custodian or a broker, or a fund, that you choose the right jurisdiction to set up your crypto business or to invest in. And I said there that I've said earlier that what the percentages of how many people invest in crypto, and 1 in 10 adult populations own a crypto wallet, and that's obviously just going to increase, in my opinion. And crypto is clearly very exciting, and it's clearly the future. So we just need to make sure that there is that these risks are covered off. So, I've given you a very brief, quick oversight of how it can go wrong, and I'm sorry I've rushed through that, but it's important to understand, understand the risks so that we understand, what comes after that. We've all heard of MiCA, obviously, the markets in crypto assets regulation, and the EU are making great strides in order to protect the sector. Now, the collapse of FTX has given everybody a bit of a kick up the backside to make sure that this sector is regulated. We've talked about it for years. Gibraltar, of course, are ahead of the game. The UK are significantly behind. Certainly, the British government have been talking about regulating crypto for at least 5 years, and that changes as we've changed government. So we haven't really got anywhere with that. But now, of course, we are in a consultation, and MiCA is significantly further advanced than that. I've put a few points on there about MiCA and what it sets out to do, but it's hoped that will be introduced by the middle to the third quarter of next year, and that will obviously be relevant for all EU member states, and it takes great steps to making sure that the sector is safer across those nations which are members of the EU. So that's a good place to be. The US, of course, are also making great strides. I haven't put it on this slide, but the US are taking things further as well. And the Securities Commission are advanced in those discussions. And again, FTX has encouraged that. Next slide, please. Skipping through a few there. So we've missed out the UK, but the UK effectively, as I mentioned, we don't have, we are not as advanced as MiCA, but we are in the process of having consultations on it at the moment. I'm sure, as other jurisdictions have experienced, industry has a very different outlook than government, and obviously have different agendas. Our current Prime Minister is very keen on bringing in crypto, but there have been lots of discussions with the exchanges. You may have read in the news that Binance have been knocking on the door of number 10 for quite some time. So it's important that we get crypto regulation right. It's a really fine balance between heavily regulating the industry, which will put off investment. And if, for example, we don't get it right in England, you will take your funds and invest them in Gibraltar or any other state that's safer and a better place to do. And of course, that is already happening. So we need to really step it up. In the UK, there are a significant number of frauds. I mean, it's a full-time job for me managing it, and there are lots of people like me. So we clearly need to get it right for these victims. And then coming on, of course, to Gibraltar. So, Gib is a great place to invest in crypto. 2018 was when the regulatory framework was introduced in Gibraltar. So significantly further ahead than most other jurisdictions across the world. Gib has been known as a place, the go-to place for investing in crypto. And you've seen that because you are heavily populated with crypto funds and those in the crypto space. I've had clients coming to me, as well as advising them on crypto, the things that go wrong in crypto. I also do a lot of advice on setting up crypto businesses and making sure they're safe. And properly compliant. And in the last year, I've pointed a number of them to Gibraltar, because the steps that they need to take here and the tax consequences here just doesn't make sense whilst we've got our current regime. So Gibraltar is a great place, and if you are, wherever you are in the world, if you are thinking of going into crypto or setting up in crypto or in just investing, if you can do that through a company or platform incorporated in Gibraltar, you know that you've got the safety of the DLT regime, which I'm not suggesting it's belt and braces. Things go wrong from time to time, but it is significantly better than other things that are out there on offer at the moment. Next slide, please. I think we've missed a couple there, but it's fine. Effectively, what I just wanted to point out about Gibraltar, from my experience, bearing in mind that I do some work in Gibraltar, is that the approach that Gibraltar has in terms of trying to meet clients' needs, the crypto space, why you should invest in that space, why you should work in Gib. I've put some key points here. It's dynamic and flexible in terms of its legislation and regulation. And I appreciate that individuals or corporates don't always know that, but from a lawyer's perspective, bearing in mind that I work across a number of jurisdictions, you need to take my word for that. But there's also very attractive tax structures in Gibraltar. It's obviously English language is spoken there, and it's often seen as a bit of a gateway between the UK and Europe. So MiCA is obviously behind Gibraltar, and the UK even further behind. So I would like to hope that we will learn from Gibraltar and from MiCA and take the best of both, but I suspect that probably won't happen. But that's where we are. So I know there are other people lined up to speak today about Gibraltar, and I'm sure they'll be better placed in some ways to speak about the regulatory regime. But I hope I've emphasised this morning or this afternoon, and I appreciate I've rushed through it, that there are risks in the sector. I see the risks, so I can explain to you what those are. But on the whole, crypto is a very exciting sector. It's definitely the future, and it's great that we've got so many people interested today in the sector. It's a brilliant place to be, but it is very important that at the beginning you get it right. You understand the regulatory regime in which you choose to conduct your business. Thank you. So that's me. I was told to finish at 12:30. I'm sorry I've rambled through it at high speed, but if there's any questions, Denise or Mark, maybe there's some time.
Thanks, Louise. That was great. Yeah, there was a couple of questions. I might try and roll them up into one and see if we can at least get one in from Mohit. I think you may have partially answered some of these, but the question is, why is jurisdiction so important in crypto when the challenge is global fraud? Which jurisdiction will apply when there is a global fraud, and can the judgment of one jurisdiction apply to another?
It's a very good question. Thank you for asking them. There needs to be a worldwide approach to stop crypto fraud. So it's great that Gibraltar have a good system, but it's not going to help the fraud when it's committed over here, for example. So if we are to try and trace through these, stop the fraudsters, we do need a global approach. And I'll just give you one quick example. The fraudsters are obviously criminals. I've talked this afternoon, keep forgetting the time difference, about the recovery, but actually there is also a crime there. One of the biggest problems that we face, and this is wherever you are in the world, I think, certainly in the UK, is that you'll report it to law enforcement, they'll do a little bit of research, do a little bit of investigation, and very quickly they'll find the fraudsters offshore. And then they'll say, well, it's not my jurisdiction, I can't help. So the fraudsters are never caught or very rarely caught, because it just goes round and round. So you're right to raise the question, why does it matter? But it does matter, because if you are using a platform or an exchange or a broker in a jurisdiction which helps to prevent fraud, then hopefully you won't find yourself at the wrong end of it. So, for example, if you are operating in a jurisdiction where there are no regulatory or compliance requirements of a crypto company, then how do you know that your money's safe? How do you know that there'll be an easier target for a fraudster to attack? Which is why the UK, by the way, is so easy to attack, because there's no compliance regulation around it. The stats will be very different in Gibraltar. In Gibraltar, the fraud is significantly lower by some mile than the UK, and that is because the entities there have to go through a whole regime and framework to make sure that they are authorised and compliant. And to answer your question about going through court and which jurisdiction applies, the relevant jurisdiction is where the damage has been done. So if you are living in France and you buy you use a Binance wallet, for example, who are in the Caymans, and you are French and live in France and you lose your money, then the jurisdiction that's relevant to that claim is France. So that individual will need to go to France to fight through the French courts and use their process. If you are in England and you lose your money, the jurisdiction is England. English courts, if you get a judgment in English court, it's recognised worldwide, and that will apply to most European countries as well. So exchanges do comply generally with orders from the court.
Great, thanks for that.
You're welcome.
So thank you so much, Louise. I'll try and collate some more of the questions that were here in the chat and get them sent over to you. So please send those over to me by email a couple of times into the chat. If not, you can find me on LinkedIn. We're going to move on to our next guest. So I'm going to sign you off now. Louise, it's a pleasure having you. Thank you so much for all that.
Thank you for listening. And I've just put my email address in the chat if anyone wants to contact me.
Fantastic. Thank you so much.
Thank you.
Right. So while I bring Ernest in, who's guest, I will hand over to Mark so he can do some of the introduction.
No problems. Thanks, Denise. And again, thank you, Louise. That was a great presentation, very insightful. Our next session is a fireside chat with XReg Consulting co-founder Ernest Lima. The subject is breaking down crypto regulation barriers. Ernest leverages a background in financial services and rare technical expertise. Prior to XReg, he led and managed the legislative reform program at the Gibraltar Financial Services Commission, the single largest financial services legislation reform in the jurisdiction. The outcome of the work was a consolidated act and a coherent, harmonized set of supporting regulations. Thank you for joining us, Ernest. We look forward to the presentation.
Thank you for having me.
So Ernest, so good to see you. I'm so glad you're here. Relief. So thanks everybody for staying on for our second session. We are really happy to be finally talking to XReg Gibraltar. You are quite the success story, I would say one of our biggest startup success stories. So we're going to dig in and find out more. But first, you're going to tell me a little bit about your background in financial services and your expertise in the legal and technical aspects. And how are you navigating the evolution of regulatory requirements and emerging technologies in the crypto industry with XReg, Ernest?
Yeah, thank you, Denise. It's great to be here. As I said, it's a bit long overdue, maybe, but it's worth, I think, being here talking about XReg. It's very exciting. So yeah, to answer your question, as Mark said in the introduction, I'm a financial services regulatory lawyer by profession. I did that for almost 9 years, working with a whole raft of financial services entities, banking, investment services, e-money, and I did work with the Gibraltar Financial Services Commission on the lawyer side, helping with applications, helping with compliance documents, policies and procedures. And after a few years as a lawyer, I did a secondment at the Gibraltar Financial Services Commission, where I got an introduction to working at a regulator. I thought it was really exciting, and I saw that there were good opportunities to do something different with my expertise. So after that secondment, there was an opportunity that came up in the policy team, and I went for it. And I eventually headed the policy team. And as Mark said, I worked on the legislative reform program, which included transposition of EU directives, consolidation of all the financial services legislation here in Gibraltar. And it also included the work around the DLT provider regime here in Gib. So I was involved in the policy work around that. So together with my other co-founders and other colleagues at the GFSC, we developed the regime for crypto, which was incorporated into the broader reform program. And that was back in 2016, 2017, when government and the Gibraltar Financial Services Commission were developing a regime for virtual currencies. There was a lot of consultation with industry, and as Louise mentioned before, the regime came into force on the 1st of January 2018. In 2019, we decided to set up XREG. A few of us got together. We thought there was a great opportunity. I've always had an interest in setting up my own business, so consultancy was an easy or a clear route to go into something for myself and for my co-founders. So we set up XREG, and it's been almost 4 years. It's been an exciting 4 years for us. As Mark mentioned, but I'll give you a bit of more information about what we do. So we are a public policy and regulatory affairs consultancy that specializes in crypto assets, and we have a mission. Our mission is to make crypto safe and successful. So we aim to do this by working with governments, helping them develop sound policy, assisting them in the creation of good regulatory regimes, encouraging growth and innovation, whilst also holding service providers to high standards. And we also work with regulators, helping them supervise effectively through better understanding of practices around crypto, what are the key risks and trends. So we started with a team of 5 back in late 2019. We are now a team of 25, most of whom are former regulators, and others are government policy officials. And we have a presence in, obviously, Gibraltar. We're in Europe, the UK, the Caribbean, and South America. So we work with governments, regulators, businesses globally.
So Ernest, I'm going to go out of script here, but we've had this conversation already. Where is XREG currently advising in terms of regulatory approaches? Because I think there are some people here who would love to hear a little bit more about that.
Yeah, so we obviously advise here in Gibraltar. We help private companies with authorizations as a DLT provider. We also do a lot of work around the AML, more broadly outside the crypto. But obviously Gibraltar, we advise. We're a global consultancy company, so we do have clients in the Caribbean, in the Middle East, in Europe, in Asia. I normally summarize it: anything that touches crypto regulation, we can do. And we've got people that are strategically located in some of the jurisdictions where we see a lot of movement in this space.
Okay, so what are some of the key considerations for businesses and innovators that are seeking to comply with regulatory frameworks whilst they drive innovation forward?
Yeah. So to Louise's earlier comments around the jurisdiction from a fraud perspective, I agree that's really important. But also from a compliance and regulatory perspective, it's really important which may be the jurisdiction of choice for a particular entity. So that is always a key consideration, especially with so many changes in the crypto landscape. The regimes are constantly changing, evolving. There are jurisdictions that are bringing new regulatory frameworks all the time. The markets in crypto asset regulation, which was just mentioned by Louise, it's a really important one because it will influence other jurisdictions, and I think the direction of travel in some of these other places. So looking at jurisdictions and doing an analysis across numerous jurisdictions is really important. You need to look at what are the products and services that you're offering that may have an impact on where you should be looking to set up, because there are some jurisdictions that are more limiting than others. We all know that the Financial Action Task Force has mandated all the jurisdictions to have some kind of AML regime, but many other places are looking to develop a broader regime. We've already seen some of them, but there are a lot more that are to have more of a conduct of business, prudential, market integrity regimes, and not only AML.
So going back to the story of XREG, how have you been able to navigate the challenges and make sure that XREG Consulting is the success that it is today?
So it is a good question. Obviously, we set up in late 2019, and then COVID hit us very soon in 2020. We had a lot of plans to travel and get exposure globally, and obviously we were very limited in how we could do that. But we did via webinars, via content, via participating in conferences, in joining industry associations. As I said before, crypto is constantly evolving. So following trends and developments globally is a must. For us as a firm that advises both the private and the public sector worldwide, we need to be aware of exactly what is happening in countries, in regions. So we monitor that very closely. We look at the direction of travel by following international standards like IOSCO, obviously the Financial Action Task Force. I mentioned before MiCA, that's going to be an influence to many others. We try to participate in as many discussions or responding to consultation papers. That's also something because we can see what's happening by looking at what people are consulting on, and we try to be active and get as much exposure as we can. We know that there's a lot more. So crypto has been, at least the regulatory frameworks that we've seen over the last few years, center around the service providers and issuers to a lesser extent. But we look out for the next big thing. So Web3, decentralized autonomous organizations, which I know you're going to be talking about later, DeFi space, NFTs, different products that are not covered by MiCA, for example, borrowing and lending of crypto assets. So regulation is always playing catch up. So when we work with regulators and other governments, we try to encourage them not to look at and not to be too prescriptive, because inevitably things have to change, which is why I think Gibraltar is a great model to follow with its principles-based regime.
So what would you say is the industry within the crypto industry that you feel you are looking most closely at presently?
There's in terms of the issuance space, the issuance of stable coins is at the moment an area that many jurisdictions are paying very close attention and are looking to develop some kind of regime. So that's the immediate one. Mm-hmm. But I think Web3 generally, the DeFi space, it's going to be big. There's many centralized entities that are looking to, but at the moment those that are centralized are already centralized. But how can you be decentralized? How decentralized can you really be? And where do you draw the line? What are the parameters? I think going back to the key considerations, it's some of these players are entering into a regulatory space for the first time. So they need to understand how do they keep up with the developments. What are the limitations? Where are the boundaries? And that is something that we look at as well. Help them understand whether they fall within any type of regulatory framework, mm-hmm. and if not, what they can do, and then help with the compliance generally.
So can you share one second, because I've lost myself for a minute here. where there was one question I really needed to ask you, and then also we have a question in the chat that two people are asking. How can you share any key strategies or approaches that will contribute to growth and recognition of a startup in the crypto industry? That was my question.
So, no problem. Now, one of the first things that we had to think about when we started, obviously there's business planning and continuous business planning, strategizing, because as I've said various times, things are constantly changing. So you need to have regular sessions, brainstorming with your team and making sure that you are looking at the next thing, and keeping things lean as a startup is really important initially. Obviously, as you grow, you need to make sure that you recruit and you've got people to be able to service your customers. But keeping things as lean as possible, I would say, is another thing that is really important. Pivot. If you have to pivot, you have to change your approach to things, change the way that you are running the business. That is also something that you need to have the flexibility to be able to do. And to that point, we had set up X-Ray Consulting, which is a consulting practice, and we've got various other companies around the world that are offering consulting services. But initially, we also set up Basnet and X-Ray Compliance, which are two of the X-Ray group companies. Basnet is a data reference company who's led by one of my colleagues, Neil Samtani. He's the CEO of that company, and it's a different business model. It's a data company. So again, keeping the diversity in what we do. It's still crypto. We complement each other very well as a group, but we do different things. And X-Ray Compliance does AML audits for crypto, and is also looking to develop a compliance product for counterpart bus due diligence. So it's a different angle to what we do. And finally, let me just add that I think in terms of being successful and how we adapt and what we look at, obviously surrounding yourself by great people is really important, and building a team with the right expertise and having the different skills that you need to be able to service the whole community is paramount in what we do.
So I can vouch for the fact that you built a great team from day one. It's also really good to have a startup advising and consulting other startups too, because you understand their needs better. I think we're going to go straight to the question we have in the chat. So Mark, if you just want to jump back in, because that would be great.
Yeah, no problem at all. Thanks, Ernest. As Denise mentioned, there are a couple of questions that are similar. Earlier, Ernest, you said that the regulation is always playing catch up, but the questions are about whether any traditional financial services regulations do apply to the crypto world, and if so, which are they?
Good question. So yes, there are some existing frameworks that could apply. Not always, but they can apply. So, for example, the markets in crypto asset, the Markets in Financial Instruments Directive, MiFID, in the EU would apply to crypto if you're dealing in financial instruments. So there are some crypto assets that could be considered financial instruments. So if they fall within that definition, you would be caught by that regime. There are certain activities that could be equivalent to payment services, for example. And again, it is a very fine line, which is why there is guidance and other measures that are going to be issued in this case, by the EU, to complement the markets in crypto asset regulation, to make sure that there is more clarity, because at the moment there's been quite a scattered approach, I would say, across the EU, with different interpretations by different member states or different regulators as to whether or not a crypto asset could be considered a financial instrument. And likewise with payment services. There's also the e-money directive that could apply. depending on whether a stable coin could have the same characteristics as e-money. But again, there's no harmonization across the board, which is why with MiCA there is the introduction of the e-money tokens, which would be authorized under that directive. So yes, there are some overlaps at the moment, which are not easy to tread in some cases, but hopefully there's more clarity in the near future. Thank you for having me.
Thank you, Ernest.
Bye-bye.
Appreciate your time.
Okay, give me
Great.
1 second.
No worries. Well, while you're busy getting our next speakers in, Denise, hello, Christina, as well. I'll just do a brief intro for our next session and our very first panel discussion of the day. This is our case study panel featuring 3 speakers: Hamza Al-Shamar, strategic advisor and investor from NAS Digital. Hopefully I pronounced that right. Apologies if not. Tommy Quite, co-founder of Flow Ventures, and Maurice Moreau, CEO of HODL. Our panelists will delve into their respective journeys, sharing insights, lessons learned, and best practices for establishing and managing crypto funds in Gibraltar. We will explore some key aspects such as fund structuring, regulatory compliance, investor relations, risk management, as well as how to navigate the unique opportunities and challenges within crypto. I'll just pause for a moment as our speakers start joining, but we'll welcome them shortly. Maybe have a quick water break in the meantime. As with the previous sessions, please feel free to drop any questions in the chat, and we'll get to as many as we can. As Denise said, also feel free to email her directly with any that we don't get to. Cool. I see our speakers are joining us now.
Can you hear me, Mark?
Welcome, Maurice. I can hear you. Yes, loud and clear.
Thanks.
Welcome, Tommy.
Hi, Mike.
Hi.
Hi,
Thank you
Maurice.
for joining us.
Hi, Tommy.
And sorry, Christina, I didn't introduce you, but you'll be moderating the panel, I assume.
Yes, my name is Cristina Najera. I am based in Dubai, and I'm the chapter director of Startup Prime Dubai. I'm excited to join the crypto community there because here in Dubai is huge. So I'm happy to share some insights and understand better how each city or each country is contributing to the development of this new technology.
Fantastic. Welcome, and thank you for joining us today.
You're very welcome.
So yes, everyone is here, and I will slowly bring them in. Okay. Thank you, Christina.
Thanks, Denise. I'll jump out.
You're very welcome. Shall we start?
Yes, please.
All right, let's do it. Thank you so much, everybody, for joining us today. We are all here to understand and to learn more about crypto. In this case, we have 3 speakers. We will start with Hamza. Hamza, thank you for coming. Based on your legal and commercial acumen plus experience with startups, what are some of the challenges faced by entrepreneurs and investors in the crypto space? And how does selecting reputable jurisdictions address these challenges? Oh.
So I think Hamza might be having a little trouble. In the meantime, maybe we can jump to either Tommy or Maurice and then come back to Hamza.
Okay, let's start with Tommy then. Hi, Tommy.
Ina.
As a co-founder of Flow Ventures, could you share some insights on the specific verticals of crypto-driven innovations that your firm has been actively participating in?
Yeah, absolutely. So hi, I'm Tommy. I'm currently involved with Merit Circle, Web3 Gaming DAO, and Flow Ventures, Web3 Venture Fund. So it's a small private fund in Gibraltar. We have investors from all over the world, but uniquely we have an LP base that is all either working full time in crypto or have their own crypto projects. So we have a very large extended network within the Web3 space, and also a large combined base of expertise and knowledge. And that allows us to help Web3 projects with the full A to Z in terms of what they need. And for that reason, we've also been able to incubate a lot of projects. So yeah, in terms of verticals we are interested in, I would say I can list 3 categories, sort of as my top 3. Obviously, like it's very diverse. Web3 touches on almost everything. So there's a lot I'm excited about. The first category I could almost would say it's not really a category, because it's, in my opinion, it's fundamental to all categories, to all Web3, and that is decentralized finance, also known as DeFi. And I hear a lot of people that now say they're either bearish on DeFi, or DeFi will never work, or they believe in certain aspects of crypto but not DeFi. And to me, that's almost like saying like you're bullish on the internet, but you're not really sold on free information sharing. Like they are fundamental. One is fundamental to the other, and in this case, DeFi is fundamental to Web3. And let me explain that, because the only thing that makes Web3 unique versus Web2, or the most important thing, is the value that we can transfer over the internet. So we can hold and record value on the internet, and that's what makes all of this valuable. And the transfer of value, you need financial rails, and DeFi will be the financial rails of the Web3, and ultimately by extension of the world. Bitcoin, for example, is also DeFi. And now the amount of DeFi a project or a certain category needs will vary. Like some projects, some categories are very financialized, and that's also, if you sort of look at DeFi, so where really the financial innovation, sort of the fintechs, the Web3 fintechs of this world, that's, I think, usually what people refer to with DeFi. And there we have seen a lot of problems. We have seen a lot of innovation, but also a lot of problems. And I think there's a lot to be bearish about. DeFi is in its infancy, and there's some very serious problems that need to be tackled first. For one, we do not strike the right balance between, on one hand, innovation, and on the other hand, the cost of experimentation. So ideally, when you do experimentation, there's a certain cost to it, and you're willing to accept a certain cost because you know that ultimately it's going to generate a lot of value. I think the current cost of experimentation is way too high, and I think it's needlessly high. I still think ultimately the value it can bring is going to be so much bigger, but I think it's very needless. It's almost like enhancing grifters, fraud, just by not having certain best practices, but not having technology that is already available but not used, by not using certain best practices, but not doing any kind of serious self-policing as an industry. And secondly, and that's what I think Gibraltar is doing very well, regulation. So part of this equation, not the main part is the tech, and then secondly self-policing, and then there's regulators. They need to have forward and progressive regulation. People need to know what the rules are. And currently, like if we look at the SEC, I would say that's the exact wrong approach. They try to strangle it. They create more uncertainty. They not just strangle the innovation, but they're also not protecting any investors. Quite the contrary, actually. Gibraltar, on the other hand, is sort of an example of the right path, and I still think there's a lot of additional things we can do. And Mika sort of is very encouraging. I think that's also going the right way. but it's still a long way from where it should be. And of course, it's going to be a moving target to a degree. Like this space is going to evolve fast, the tech is going to evolve fast, and regulation is going to have to fit that somehow ultimately. And regulation is always a bit behind, but it is. I do hope like we will be sensible, and we already see like quite clear differences between different regulators. And then it's so why like there's a lot of negative. Like why am I bullish on it? Because again, like it's fundamental to Web3, and I think it's inevitable that they will supplant most of the current financial system and monetary system as well. That's sort of a different use you can put on it, and I think uniquely Bitcoin, but to a degree also Ethereum are trying to cater to this. And yeah, it just, the benefits to me, having lived in both worlds and sort of seeing the potential, are so clear that I just can't see a world without it. And also just consider the alternative for a moment. Like if we were to, for example, write a white paper for the current monetary system and financial system, and we sort of like made our deck and we went out to investors, we like listed benefit like money creation, debt encouragement, too big to fail institutions, and we tried to raise funding. We wouldn't raise a single dollar. Like we would be left out of the room, and that's a broken system, and that's I think we are testing the limits of that system. So just that reason alone, I think makes it very interesting and necessary. Then a second category, a real category I would like to list is gaming, Web3 gaming. So that's one we've been very involved with as well. I think this is probably from just in terms of how many users it will onboard and how big it will be, it's one of the ones I'm most bullish about, and that's because you're not gonna onboard the next 1 billion users through a fintech application. Like you're not gonna make them excited or give them access to a global financial system through a fintech application. Like you're gonna reach some of them, but with gaming, it's almost like a Trojan horse, because like almost everyone, especially the generation that makes me sound very old, but below me and generation before that, but even my generation, like everyone likes gaming. They're all like doing a amount of gaming. Like for me, not so much anymore, but I have at times in my life, and it's often the first touching point we see for people touching Web3, and by extension, financial infrastructure. So they learn about asset management, they get access to, not the same yet, but if you were to imagine a system that is primarily different by DeFi, is borderless and is permissionless, then suddenly like it's an equalizer. And I think, fun is just such a viral thing. So that will make people seamlessly learn about it and become financially more literate, but also get the access. Aside of gaming just being a very big industry in itself that will grow, and there's some clear benefits of having Web3 technology embedded in games. The game industry itself like is quite hostile still to it, but we do actually see the big, even the big like game publisher studios, they know it's gonna come eventually. And that's to me again just like a matter of time. On the flip side, it's also one of the hardest to invest in because the value rate among startups is high, games even higher, and then you have the intersection of games, of Web3 and startups, and just the big puzzle that needs to fit, and that's incredibly hard. So you have to really know what you're doing when you're investing in Web3 gaming. There will be some huge winners, but also a relatively large graveyard of failed projects against every winner. Then lastly, the last category is ticketing. I think that's a very interesting one. I think most people agree on this one, that like has obvious advantages. At the same time, we don't see that many projects working on it yet. And I think that's partly because it's just a very entrenched industry. The incentives are very against sort of that innovation for now, but even we see like the big ones, Ticketmaster, slowly like dipping their toe and like starting to acknowledge that they need to change that. the advantages are many, like trustless value chain, every ticket is unique, verifiable, you know exactly how many people are in the venue, both from primary sales, but also secondary sales, like no fake tickets can be sold. It's complete elimination of fraud, which is a huge problem. And then also in the secondary market, you can, in the NFTs, you can embed like a price band, so they can't be resold. They can be resold, but only within certain price bands, and that is also avoiding scalping, but also making the secondary market accessible for normal people, because now it's all these middlemen buying up these large amounts, selling it for double, triple, 10 times the price, and that's all like value destructive, and none of the ticket holders are benefiting from it. And now you actually make it fair and accessible, and you cut out most of the middleman needs, and that's another huge benefit. And there's of course interoperability. That's sort of for almost every application, but here you could use your tickets as collateral. You can attach reputation to it. You can use it as a secondary ticket after having the ticket to another group. You can embed direct communications with the ticket, so that's perfect for crowd control, but also crowd engagement, like everyone in the crowd having a different light, or like there's so many ways you could go here. And this is a nice overlap, I think, with the first category, for example, decentralized event financing. So most events, they have to be pre-financed, and that's very hard if you're not a big party or you don't have access to a big party. So for a lot of event organizers, is a huge friction point. Like they can't get access to capital, even though they are certain they will sell out their event, or at least will make like their break-even target. And now you could use the NFTs, like you could make a liquidity pool, and you could use the NFTs as sort of bonds backed by tickets. And then you could, in a way, fund it in a decentralized permissionless manner. I mean, it will still be largely like specialized funds, I would imagine, that fund it, but that's okay. That's also already like a huge step up from the current situation. And I think, not uniquely to ticketing, but something I realized is that you can have the payment, so the contract embedded in the payment of token. So instead of having those two separate, you now reduce a lot of administrative overhead, and you also increase transparency and make it easier to audit, because every transaction already has the contract embedded in it, and everyone can see it. And then community, also not unique, I would say, to ticketing, but I think it's very suited for that one, because you have both sort of the element of it's a consumer-facing product, but also the NFT tickets that sort of like you want to show, you want to compare. It's like a very community social thing. But this is, I would say, for a lot of Web3 projects, I would say all projects that have or that would benefit from a strong consumer-facing brand, they should almost, like, just for the community aspect, embrace certain aspects of Web3. So yeah, I would say those three: DeFi, ticketing, and the gaming industry.
Great. Thank you so much, Tommy. Really interesting answer. And yes, Animoca, for example, here, it's really active on gaming. So it's a good insight that to get more users is easier through that industry, because there are more active users. With this, we go to Maurice. How are you, Maurice? The next question for you is, could you elaborate more on the role of Hall Ventures in supporting Web3 projects and startups? How do you identify which projects to invest in?
Yeah, thanks, Christina. First of all, maybe a very short introduction of HODL. HODL is a company that has cryptocurrency funds and offers investors an easy, safe way to kind of add cryptocurrency to your portfolio. We do that in 3 different levels. So we have a broad, well-researched cryptocurrency basket in a fund, which is kind of mostly buy and hold. We have one that is fully algorithmic, and then the thing, obviously, this question regards to is a venture fund we're actually launching at the moment. We do the ventures already for 3 years. We're now going to offer it to our investors as well. I think cryptocurrency startups that are looking for capital, venture capital, are not only looking for the capital side. I think what is far more important for them is also the experience you bring. So money has been cheap for, I think, now the last decade, and at least the last 5 years that crypto saw his really large growth numbers, and also in the venture capital side. And there's money, plenty enough money, but what you actually want as a new cryptocurrency project, you want engagement. You want people who help you with your token economies, tokenomics as we call it. We can help them test their product, for example. We can help them by it doesn't make sense to have your own blockchain, or is it better to use an existing one. So we are really looking at what they bring. And if it comes to the selection of the ventures we invest in, I think the key thing there is the team behind it. Because it's venture capital, it's an idea on paper, a white paper most of the time. If you're lucky, it has a decent website, but most of the time it's a bunch of tech boys with a great idea, and you need to make sure that they can also translate that to a real company, where the venture capital used to be a lot of token only. We now see more and more there's also an equity part involved, mainly to help them as a shareholder, to get them into that company step. Most of the time, the technology is really good. Like I said, it's often a technology-driven idea. But the company side of it is really important, because you want to have an engagement, you want to have it to be successful in any way. We've spent the last years building up our network with industry potential candidates, as well on the venture side, but also on the companies that have the money to invest in. So we have a whole network of other venture capitalists, and we share our deal flows, because mainly you don't want to be the sole investor in a project, because that means you end up with all the investment tokens, and then you make the market, which makes absolutely no sense. So we only want to have a small percentage in a token, which means you want partners in there who also can bring value to the project, and that helps you really thrive the project by having a good consortium of investors that have all have their own expertise. So where we can perhaps do something on the token economy or in the marketing, there might be another one that does community or has actually a lot of blockchain knowledge. So it's really important to not only see if the idea and the project and the team is successful, but also if the other investors can bring something else on the table than money. And then if I progress on Tommy's story, for example, in the gaming industry, which we also see as a very potential interesting industry, it's very difficult to have one game. Is that going to be successful or not? So we're trying to move that to more platform solutions that can have more games on the platform, so the chances of having a success are larger than with a single game. That doesn't mean we don't have single game ventures, but at least we always look at a broader perspective. What are the chances to succeed for the project itself? And the more angles it has and the more sophisticated it is to bring multiple strategies to the table within the space, the more interesting it is.
Nice. Thank you so much, Maurice, for your answer.
You're welcome.
It's Hamza here. Hamza, can you hear us?
Well, he's on mute, seeing by his microphone. So maybe that's the first step.
Yeah, I'm not sure. Maybe we can go to Tommy until Hamza is ready. Again, Tommy, your turn. As a venture firm with a deep understanding of distributed ledger technology, what are some key considerations you take into account when evaluating a potential investment? What advice you will give to entrepreneurs looking to enter this space? and establish successful crypto funds?
So on the first one, I would say it's not much different from traditional venture. So we usually invest in the seed stage, pre-seed stage, and we do incubation. And there it's all about the team and the idea, with the team being the most important. So we look for founders that we think are not just very competent, but also founders we like to work with. I think that's one of the unique conditions we would add, but that we don't see with all funds. So we really like to get in the trenches with them, like building alongside our partners, because we have built on various projects and we have very strong ideas about the do's and don'ts. And of course, we filter for projects that we think that know a lot about the do's and don'ts, but it's just very hard for projects in that stage to know about all the do's and don'ts. And that's exactly the value we try to add. We like to ensure the direction of this space in a way, but certainly our projects, and also by staying on top, we try to stay on top of all developments in the space, but also make sure that our investment becomes a success. Like, we really see it as our failure if a project that we back doesn't become a success. It's not like we sit back, we cross our fingers, and we're like, we hope some fail, some succeed. I mean, that's going to happen regardless. This is entrepreneurship, but we do share in the failure. Like, we see it as our failure as well. So we will work very hard to make sure that doesn't happen. And then, we want to be users of the product. Like, we want to have great people that want to work with, but I also want to have a great product that we can envisage using ourselves. And as soon as we can, we will. So I would say, to summarize, is it a product I'd like to use myself? Is it a team I would hire myself? And is the team I would like to work with if I didn't have my own businesses? If it meets that three criteria, like early on, that's very good. We don't try to get very quantitative in the seed stage. We do that with more of our liquid strategies, because it's just, in our experience, it's just noise. Like, you can fool yourself into a wrong decision, and it just it's a waste of time. And then I would say on the second part, so what I would advise entrepreneurs, I would say, if you're I guess that's more general advice, but I would say for entrepreneurs, because I think it bears repeating, don't get stuck on your branding, on your roadmap, or not being able to raise funding yet. Start building yesterday and think every day. Don't start raising funds before you have a beta product. Don't even think about it. And in this market, you cannot raise an idea anymore. And I think that's very healthy, because I think we've seen a lot of tourists that came to crypto for easy fundraising, and they didn't understand the industry. They didn't know what they were building. They didn't know why their product needed crypto. They just saw dollar signs and they knew there was easy money. And that was not just in crypto, we saw that in normal venture as well, but in crypto, it was even easier. And especially there was just a lot of fast and loose, and there was to no one's benefit. I think it's much more healthier again now. So then we get back to the basics, what are you building, and start building it and keep thinking, because this space is so competitive and it changes so fast. So even more than in regular startups, you need to be out there. You need to test your product. You need to collect data. You need to get real market feedback and keep iterating. The shorter you can make your iteration cycles and the more you can do of them, the better your product will be and the more you'll stay on top. I think if I were to name one differentiating feature between sort of the very successful teams we've had as partners and the less successful teams, I think it's speed of execution. So when we see that a team consistently hits its target on time or earlier and sets them very ambitiously, that's usually the best sign that they will succeed, even if they went in the complete wrong direction at first, just because they're so fast to find out and to iterate. And then on the flip side, you see teams that stay in the last 5% of details and you just get stuck on it. Like, should the color of our merge be? And before that, we can't put out our beta version or that. Like, I'm just like giving an extreme example here, but yeah, that's what you don't want. And yeah, I think unique to Web3, again, like, don't be opportunistic. Ask yourself, is this like, are we catering to the Web3 market? Ultimately, like, there's always a Web3 angle to find, because that's what I strongly believe in. I think most people here is that, like, it will touch almost on everything. Like the internet, the current internet touched on everything, but that doesn't make you a Web3 project. Yeah, that would be my advice.
Great. Thank you so much, Tommy. Let's move to Maurice now. The last question. With your presence in multiple countries, how do you diversify your portfolio? And what is the unique opportunity that Gibraltar offer in this regard?
Yes, that is, well, the last question is actually the most simple one. Gibraltar offers regulated environment. So we're based in the Netherlands, Rotterdam. So in the Netherlands, Luxembourg, Spain, we all registered with the authorities, but we are waiting for MiCAR, so the market in crypto asset regulation. In Gibraltar, they were a step ahead, and regulation was already in place, and that is very important for a lot of our investors, family offices that, for example, have in their statutory environment said that they can only invest in regulated funds and not in registered funds, for example. So that was one, and then we had a choice between Gibraltar and Swiss, and maybe that's a nice example to explain. So they both are very good English-speaking countries, so that obviously helps. But where we had a bounce in Swiss was actually the two reasons. One, we needed a depository bank that holds the crypto assets. That kind of goes a bit against that we wanted to have it in our own custody and cold storage with multi-signatory, etc., etc. But there was a point that we say, okay, we could live with that. Then the custody they offered wasn't as many coins as we would like to have in the funds. So that was the second one. But then the third one, that was the bit of the deal breaker. We could only trade cryptocurrency during bank opening hours. And as we are in a 24/7 business, that was kind of a difficult solution. So then within Europe, we progressed and found out that actually in Gibraltar, it was regulation was already in place, but not only the regulation was in place, all the parties involved were actually quite experienced. So we had 3A as lawyers, we had Abacus as an administrator, and those teams worked really well to get our fund launched. I think we did it in something like 10 weeks. Obviously, we had all the experience from the funds we already had across Europe. Which means we didn't have to write the IM or PPM from scratch. We already had that in place, and we already had a structure in place. We knew what we wanted to do with the cryptocurrencies, but still, it was a very smooth process if you look at it and compare it to other jurisdictions we've been through. And for us, it's a great step, advancing on MiCAR, and actually gives us the benefit of being a step ahead of all the traditional financial institutions that are still waiting till MiCAR is in place. Now, as you know, it's been through voting in the European Parliament about, I think, 25 days ago. It's been published, so that means now for crypto companies as us, there is 18 months of implementation by all the local authorities. So that means the next 18 months, everybody can prepare, but cannot get licensed. So yeah, we couldn't obviously wait for that, so that's where we stepped into Gibraltar, and like I said, the experience has been really good. People are really well informed also about cryptocurrency, which is still a new industry. They do have the experience of the traditional finance and can actually bring it to the cryptocurrency space. I heard Louise Abbott talking earlier about regulation, and also Ernest talked about it. I think the largest problem of the regulators especially in Europe, is they try to regulate cryptocurrency into one regulation. and the chances you will lose your money by playing a blockchain game are not as much as you have all your money stored into a crypto platform or have it on an exchange. So if you're talking about security tokens, which obviously, or real estate tokens, which is going to be large industries, we already have security legislation in place. Why do we have to add a cryptocurrency legislation towards it? It's of no use. Just implement the security legislation you have already, and you're fine. And if you trade something in the weekend, all right, we need to settle it on Monday on Euronext or whatever stock exchange. It doesn't matter. But you don't have to try to make new rules for that. Just work with what you already have. And I think MiCAR is doing setting a great environment for us to, and not only us, but for all the institutions to have at least a good starting point of what they can do and what they can't do. And I'm very happy that we're ahead of the US. And like I said, Gibraltar was a step ahead of MiCAR. So for us, that made sense to go there. So we're really happy there.
Is something else?
Was there another part of the question I forgot I wanted to ask?
No worries, I can repeat. The last part of the question was, what are the opportunities? But I think you mentioned the opportunities that the city has. So overall, you already share why.
Yes, like I said, I think the most important opportunity is that everything is close and everybody knows each other, and that therefore it works really well quick. Yeah, but it looks strange, but it is. I mean, it is a financial center in a broad. Gibraltar is just a financial center in a broad sense of way, and that makes it very. It's like a London in a country, but then you have everything in place. You know where to go, so that makes it really easy. And I think also the lines with the regulator are very close, which is very convenient.
Perfect. We have some questions for the audience, but first we have the last one here open for you both, and it is: how do you see the future of crypto funds evolving, and what potential challenges and opportunities do you see in the upcoming years?
Do you want to go, Maurice? Or
you go first, Tommy. It's good.
All right. Let me first actually add to, because I think Maurice said very good things, and also I'd like to second a lot of what Ernest and Louis said. And I think the fact that like all service providers know each other also helps a lot. So it's like they all worked with each other before. When we started comparing service providers, we really saw like they were sort of among the most professionals we spoke to, but also extremely flexible. Like they are open to innovating on their own businesses. And I'll give a special shout out. And they didn't ask me; they specifically said you don't have to. But we work with Abacus and Tria as well, because of course sponsor. That's not like their style that they would ask me to give a shout out. But they've been very important, and Tria as well, and really instrumental to our success. But there's many great service providers here that we worked with. And that's really great, this jurisdiction. But let me get to the question. So the finance industry, specifically for Web3, I think is already maturing a lot. So we've seen both opportunistic, and this was emboldened by the lack of frameworks. That's why you see it more in the countries that have no frameworks. Like very opportunistic fund raising, like they would just go out there, launch a public sale, or go out to the venture funds with have an idea, and that's already being discouraged. One, by just sort of the reality of two bull bear cycles, as in bull bear cycles where we really had like an altcoin market, and secondly, regulation that is finally starting to form, sometimes for worse still, sadly, but a lot of times for better as well. And then the VCs themselves, I also think, are maturing. I would say the venture firms in crypto, they aren't, and I guess that's just because it's a young industry as well. They are not as professional as the average venture firm outside of crypto, but I do see it improving, and it's also just a function of sometimes funds literally getting washed out, or just like getting experience, getting their act together. And yeah, so it's a hopeful trajectory, but I think we have a lot to do also as a VC industry to mature still, alongside the industry itself. And I'm not worried, like the funding itself. Sorry, Marissa, that there's still like enough appetite. Like this is different from, for example, last bear market. There was no VC market to speak of. Now we're also in a bear market, but everyone is sort of confident that there will be a Web3 market, and hence venture is interested, including traditional venture firms.
Thanks, Tommy. To add to that, Christina, is there a future for cryptocurrency funds? Or there definitely is. What we did is we took a traditional 60-40% portfolio over the last 3 years and added 1, 3, and 5% of our cryptocurrency fund to it. And you could actually see that even we had I don't know, 65% bear market. If you look at Bitcoin last year, adding a little percentage of our funds will really help your portfolio to perform better. And not only the performance is better, and I think if you add 3% over the last 2 years, your performance would have been 6% better. So in a traditional 60-40 portfolio, but also the Sharpe ratio improves. So that means your risk reward ratio will actually come out better, because there are parts that is non-correlated. So it is definitely worth of having crypto exposure in your broader portfolio. Yeah, and is there then should you do it in fund form or not? Yeah, I think that is, if you are capable of doing the diversification of your own and you want to invest time in researching, you can do it yourself, but you don't have that. And then a traditional fund, and it doesn't matter if it's a cryptocurrency fund, a venture capital fund, or what kind of fund in crypto, it will definitely benefit your portfolio.
Great. Thank you so much for all your insights. We have some questions right here. Do we have time, Denise or Mark?
Yeah, I was just going to say, Christina, thank you so much for moderating that session. That was really good. You did a fantastic job. And thank you to both of our speakers as well. We've got Julian Pitaluga, Director of Fund Services, Abacus Gibraltar. Derek Baglietto, Senior Relationship Manager, FinTech and Institutional Clients at Turicum Private Bank. And Jay Gomez, Partner at Trier Lawyers and Deputy Chairman of the Gibraltar Funds and Investment Association. In this next workshop, these experts will exchange their insights, share experiences, and offer practical advice for aspiring crypto fund managers and investors. We look forward to learning from their wealth of knowledge and gaining a deeper understanding of the critical factors for a secure and compliant setup in the ever-evolving crypto industry. Welcome, Derek, Julian, and hopefully shortly Jay as well.
Hi everyone.
Thank you for joining us today.
Give me a couple of minutes. Hi, I'm just looking for was here in, oh, here he is. Great, I found him. Perfect.
All right, I'll hand you over.
Okay, cool. I'm going to be, yes, doing your slides as well. So thanks, Mark, for that. Great set, Tommy and Morris as well. They brought in, oh, lost Julian now. He keeps dropping out.
Hello?
No, he's still there.
I'm here.
Oh, okay, cool. Well, I can't see you, but as long as we can hear you and see you, I'll just jump straight to the slides. Over to you.
Thanks, Denise. Can everyone hear me? Yeah?
Yep.
Okay, perfect. Thanks, Denise, and thanks, Mark. So yes, I'm a partner at Trier Lawyers. I'm also in Gibraltar, and I'm also the Deputy Chairman of the Gibraltar Funds and Investments Association, and we're joined by Derek Baglietto from Turicum Bank, and also by Julian Pitaluga from Abacus. Gents, do you guys just want to introduce yourselves quickly before we move on to the topics we're going to be discussing?
Sure, yeah, I'll jump in. Yeah, so obviously, as Jay mentioned, my name's Julian. Been working with Abacus now for 10 years. My trade is in accounting, so qualified as an accountant. but looking after our funds team now for the last 5-6 years, and obviously crypto has been a big part of that. Yeah, so that's me.
Hi there, Derek from Turicum Bank. Personally, I've been working here for 6 years in the fund desk, so it's institutional desk, fund and crypto clients also. Before that, I was working in Credit Suisse in the institutional desk over there, dealing with funds also. So we are probably the bank with most of the Gibraltar crypto funds. So open to provide you with some insight into how these work and the do's and don'ts, really.
Perfect. So the aim today is to give you an overview of basically the how generally things to think about when you're setting up a crypto fund, and perhaps some of the things that we've learned as we've gone along. And I feel like Maurice and Tommy have done some of the heavy lifting already for me in the previous session, talking about some of the pros and cons of setting up and things that you need to think about. Now, whilst of course I'm based here in Gibraltar, I don't want this to sound like a sales pitch for Gibraltar, and instead what I'm going to focus on is some of the key things that I think you should think about, and perhaps how we found solutions in some of those situations. Now, of course, they might not be the only solutions, and I'm sure there are others. So, Denise, I think we can skip through to the next slide. I think that's too far ahead. There's one before that, I think.
Oh.
There we go. Perfect. So I thought I'd start off with the first point is you're probably looking at it and thinking that's slightly odd, a sector that's well established. But I thought we'd start off with perhaps a slightly more controversial point. And when I think about a sector that's well established, obviously when we're looking at crypto funds, you might be thinking, well, still relatively new and not really well established at all. In fact, what we mean is a sector that is established in the sense of the structuring behind the fund itself, and not necessarily the asset class. So when you're looking at a jurisdiction to domicile, one of the things to think about is, does that jurisdiction have a robust funds regime in place? Has it been tested? Does it work? Is it flexible enough to allow the asset class that I'm going to be investing in, and obviously in this case being crypto and digital assets? So when you're looking at the funds regime that you're thinking of using, think about all of these points and try and find a funds regime that allows you the flexibility to invest in that asset class, in this case digital assets. We're quite fortunate here in Gibraltar in the sense that when we look at the crypto funds that are domiciled here, we're using regimes that were established many years ago. So in the case of the regulated fund, the Experienced Investor Fund, that legislation goes back to 2005 and obviously has been updated since. But the foundations of it have been around for a relatively long period of time. The regulator understands it, the industry understands it. And all that plays into what Maurice and Tommy were talking about, the fact that the industry here in Gibraltar, and by industry I'm referring to the service providers, understand the way that it works. The second point there on AIFMD is something that Maurice very briefly touched on when he was talking in the earlier session. And AIFMD is the EU directive that affects alternative investment funds, and it's the directive that specifically would apply to crypto fund if you're looking at domiciling it in a European territory. Now, Gibraltar obviously used to form part of the European Union. We exited with the UK, as most of you probably know. So that directive still applies here in Gibraltar. And one of the main issues with that directive is that it forces the appointment of what we call an AIFM depository. if we just think of it as an entity that is responsible for custodying all of the assets of the fund in question. Now that becomes problematic because obviously when we're looking at the custody of crypto, of digital assets, most of your traditional custodians or your traditional depositories aren't able to actually custody those assets, or in cases where they are able to custody them, you may be faced with some of the restrictions that Maurice was referring to, where, for example, they may say to you, you can only trade during normal business hours. So think about some of the nuances in terms of the surrounding entities that are going to be required for your fund. So if you're going to need a depository because the local legislation forces you to have one, make sure that the terms on which you're appointing that depository work for you and for your fund. And unfortunately, with AIFMD, it tends to be very restrictive. You first have to find a custodian or a depository who's licensed to be able to provide that service. Then secondly, somebody who's willing to accept digital assets. And then thirdly, somebody who can allow you to actually trade within the parameters that you want to trade. So what we did here in Gibraltar post-Brexit was to create a dual regime. And what that dual regime does is that it allows the fund to opt out of the directive. That opt-out mechanism is on the basis that the fund is already in itself regulated by the Gibraltar Financial Services Commission. So it's not that we're opting out and then it's, carte blanche to do whatever you want. You're opting out within a regime which is safe and robust. And like I mentioned before, has been operational since 2005. This is interlinked as well to the next point, which is right touch regulation. So you may hear some jurisdictions talking about light touch regulation, not always a great thing. We instead feel that actually what you want is right touch legislation. So legislation that creates a good balance between investor protection and ensuring that the fund can operate in an effective manner. So there's no point having extremely burdensome regulation which protects consumers and then allows the fund managers to do absolutely nothing. You want something that's in the middle, that has that right touch. Certainty of laws, again, all interlinked as well. So Gibraltar has common law applies, so we are an English common law jurisdiction. So there you have as well the certainty that the legal system provides. Not always the case in other jurisdictions where perhaps they have civil codes of law which are more complicated, a lot more red tape and the like. Denise, I think we can move on to the next one, please.
Oh.
I'll carry on talking whilst you find it. So the next one that we think is important is also having a, sorry, Denise, I think we need to go back one slide, possibly. There we go. So we think it's important as well to have a regulator that understands the industry. And this may sound odd because you would expect that a regulator who's regulating a specific industry has the experience to do that. But of course, when we look at the field of digital assets, it's still relatively new. Regulators are still trying to get to grips with it. They're trying to work out whether it falls within existing regimes, whether it falls within new regimes. The regulatory landscape is also constantly evolving. So in the earlier panel session, you heard reference to MiCA and obviously the changing landscape of regulation, in particular within the European Union. We're quite fortunate again here that our legislation for digital assets now dates back to 2017, 2018. So we have a regulator who has been very proactive in engaging with the industry, which also brings me on to the next point, the accessibility of that regulator and the ability to engage with them. Critical, not just in new industries or in new sectors like digital assets, but generally even in areas where are tested, which have been tested for many, many years. In traditional financial services, you'll find that questions come up as you work through your project. And that will be even more so the case when it comes to a crypto fund. The ability to engage with a regulator to to sit down with them, to put questions to them, to put suggestions, solutions to them, and get their view before doing any of that is hugely valuable. And in particular, will hopefully protect you from an aggressive regulator later down the line, instead seeking to take action against the entity, as we've seen perhaps in other jurisdictions, in particular in the US, where the regulators have been in very recent days arguably quite aggressive in the way that they're dealing with this sector. A lot of that interaction with the regulator also happens as a result of industry bodies. So when you're looking at a jurisdiction to domicile, I would argue that it's important to find a domicile where you have a proactive, or more than one proactive industry bodies that engage both with industry but also with the regulator, to try and find solutions, to try and preempt some of the issues that may arise. And again, we're quite fortunate here in that we have, and I may be slightly biased here because obviously, like I mentioned before, I'm the deputy chairman of JIFIA, but we're quite fortunate to have two very proactive industry bodies, JIFIA and GANT, the Association of New Technologies, which engage with the regulator, with government, and with policymakers here in Gibraltar to make sure that we create a landscape which encourages business as opposed to stifles it or prevents it. And in terms of that thinking going forward as well, and trying to preempt some of the issues that may arise, obviously when we're looking at crypto funds, we're looking at an asset class which presents a whole new set of risks which are different to a fund which perhaps is investing in a more traditional asset class, or something perhaps that is a lot simpler, like, for example, investing in real estate. So digital assets presents issues like custody, things that you're all very, very familiar with. So looking for a jurisdiction that has some form of guidance around how you should deal with those things, we think is also quite important. And as you've seen on screen, JIFIA, the industry body here in Gibraltar, published a corporate governance code for crypto funds some years back, and that's now in its second edition. And probably the last few points that I would make would be speed to market. So again, in the last, like I said, I think the last panel session has made life much easier for me because they've addressed some of these points already. But speed to market is obviously important. What you don't want to find is that you decide you're going to domicile somewhere because you want to get up and running quickly, and you have a market opportunity, and then find that it takes 6 months or 12 months to set up the crypto fund. Gibraltar, we're quite fortunate in the regulatory environment that we have that allows us to launch funds in a relatively quick time period. The service providers are really key to that process as well. And we're quite fortunate to be able to deal with the likes of Julian at Abacus and Derek at Turicum. And in particular, I would flag the banks here and Derek and his team at Turicum, because sometimes dealing with what I would term traditional financial services providers can be quite tricky when you're trying to transition them into the digital world. But we're quite fortunate to have that team that are willing and able to take on this type of business. And the last one is taxation. So making sure that the way that you structure your fund is as tax efficient as possible. We mustn't lose sight of the fact that the whole reason for setting up a fund is to try and attract investment from third parties. So we want to try and make that structuring as efficient as possible. Most traditional funds jurisdictions have an efficient tax regime. It's just making sure that you don't fall foul of any of those structuring issues, in particular when you're dealing with digital assets, because obviously some tax authorities won't be as familiar as others on the specific tax treatment of those assets. So that brings me to the end of my general overview. Thank you very much. And I'll hand over to Julian, who's going to be telling us a little bit more about the things to think about from the administration, from the fund admin side, when setting up a fund. Thank you.
Cool. Thank you, Jay. Yep. So today I'm going to talk about the role of a fund administrator in the context of a crypto fund, and how some of the typical responsibilities that we have as fund admin can actually become quite challenging in that context. So can we move on to the next slide? Yeah. So I think there's a slide missing, Denise. Yeah, there we go. So yeah, just a few quick stats really to go through. Obviously, I think we're all aware that crypto funds have gained significant popularity over the recent years. And our experience, I think, shows that to be true even through, the bear bull cycles and the massive swings in price and volatility. If we only go back to 2015, there's probably a handful of crypto funds back then. That's now increased, I think, to over 1,000 in 2021. And as you can see in the latest PwC reports, assets under management hit a peak of just under $70 billion. So obviously, crypto funds are becoming very popular, and it's important that we as the service providers can keep up with that. That said, obviously, there's complexity in digital assets, which a lot of service providers may not have come across previously. And I think it's vital that, as service providers, we continue to upskill and make sure that we keep up to date with the evolving landscape. Yeah. So can we move on to the next slide, Denise? Yeah. Sorry, just one back. Yeah, there we go. I can keep talking. So yeah, I think what we want to try and achieve really is, as the fund administrator, is to create trust essentially in your crypto fund structure. So we've all likely heard the term trustless being used a lot in crypto. And this is typically used in the context where trust is removed from the equation. However, in the traditional financial world, there's still very much a need for counterparties to trust each other, at least to some degree. However, when we look at the digital asset space, in particular, we see a clear lack of trust between the counterparties involved. This could be a lack of trust between governments or regulators and the tech itself, or the industry as a whole. It could be a lack of trust between the users of the tech and intermediary third parties like crypto exchanges, or between those same intermediaries and the governments and regulators who try, or possibly in some cases do not try, to regulate in a proportionate way. And I think this kind of lack of trust also permeates into the area of crypto funds. However, I like to think as the fund administrator as the glue that keeps kind of all these stakeholders together, and working in harmony, and hopefully provides that layer of trust which a crypto fund can be built upon. So yeah, just to touch on some of the typical responsibilities that a fund admin has. I think all of these are important, but one which is very important, I think, is providing the compliance function to the fund, reviewing investor KYC and due diligence. I think is hugely important, not only for us as ourselves, but also for the other counterparties, like the likes of the bank and other intermediaries that rely on us to do that. So I think that's hugely important. Processing of subscriptions and redemptions, that's kind of standard. The maintaining of the books and records of the fund, calculating the net asset value, which is again also very, very important, and also providing accurate and timely reporting to all the stakeholders. obviously, I think throughout that, our goal is really to ensure that the fund remains compliant in all respects. So each of these areas can be quite tricky, even when dealing with traditional investments. However, this is really compounded, I think, when we look at digital assets. So I think, Denise, sorry, can you go a slide back? Yeah. There we go. Yeah. So yeah, just some examples of those challenges that we've come across as a fund admin. So one of them, which I think is very significant, is obviously in the area of accounting and valuation of crypto assets. And obviously this has been quite a big challenge, primarily as a result of the lack of established valuation frameworks. Even as of now, there are still no accounting standards specifically designed for crypto assets. And obviously this can lead to different approaches being taken by different jurisdictions. Sometimes a common sense approach is needed, and unfortunately sometimes that doesn't really align with the already established frameworks. Just one example of that is very recently we've seen the FASB, the Financial Accounting Standards Board in the US, moving towards a fair value model for valuation of crypto assets. This is something that we've been encouraging now for several years, and it's very important in the context of a crypto fund. But obviously, it's only now that that they're coming round. So yeah, looking at other challenges, the reliability of data sources can be questionable. There's often an incongruence of reporting formats and quality standards across exchanges and trading venues. And obviously it's our job to pick up on that and collect that data and process it. Quite an obvious one, I suppose, is cybersecurity. The risks are amplified significantly there. Be it dealing with what I would say kind of traditional intermediaries like exchanges and custodians, or in the context of kind of a self-custodial arrangement. There are risks on both sides. Obviously it's been touched upon already, the lack of unified, clear regulatory environments. That's obviously a challenge. I think one which Gibraltar has kind of overcome quite early on, and we've seen now the rest of the world playing catch up. And also obviously another one, another challenge which gets compounded, I think, when dealing with crypto and digital assets is obviously around AML and KYC. So for example, if we had a fund which is accepting subscriptions in crypto, the kind of the traditional ways to obtain comfort over that subscription might not work. So I think we need to be a little bit innovative and think outside the box in terms of how we get that comfort around source of wealth and proof of ownership. Obviously proving where funds are coming from, in particular from a self-custodial wallet or maybe an unregulated exchange. So I think in terms of overcoming those challenges, what we've had to do, I think, is really kind of embrace new technologies. A lot of research into what works, what doesn't work, and actually just speaking to our clients and working with our clients on these issues. I think that's really helped us kind of overcome some of those challenges. It's kind of a mutual experience. We try to assist in terms of setting up the fund and administering the fund, but also we're getting something out of it. We're learning about the tech. And obviously there's other practical challenges. I've laid them out there. So for example, one of them might be opening a bank account. And obviously, luckily enough, we've got Derek here for that. But I think just, the whole kind of practical experience of setting up a crypto fund can be quite daunting. The being able to kind of coordinate between all the relevant counterparties, such as, the regulator, the banks, the custodians, those kind of non-traditional counterparties when dealing with a crypto fund, exchanges or OTC desks or even DAOs. I think that can be very, very time consuming and sometimes difficult to navigate, in particular for a startup fund with limited resources. So obviously, I think, that's what we are here for. And I think that's kind of the main benefit of appointing an administrator. Oh, sorry, Denise. Yeah, cool. So yeah, as I mentioned, obviously, what we try to do as an admin is really kind of guide you as the fund manager through the setup and establishment of your fund. We're with you, from the start, either connecting you with all the relevant stakeholders, or for example, performing a detailed review of your offer document, which allows us to feedback on things like the valuation policy or the subscription and redemption mechanics, how investors come in and out of the fund, especially if doing so in crypto, and the policies that are kind of built around that to make sure that the fund remains compliant. So I've outlined there some of the benefits, but we can go through them quite quickly. I think the relationship between ourselves as the administrator and the manager in particular is not something that just starts and ends. I think that that continues to develop throughout the fund lifetime, and I think it's vital to allow the fund manager to do what they do best, which is obviously run the investment strategy. Obviously, being a regulated institution ourselves, I think helps throughout that process. And obviously our aim is to reduce risk, increase operational efficiency, and ultimately to provide every key stakeholder with that extra layer of transparency and trust, which is, I think, so important for the fund to be successful.
Oh, sorry, I've got to change this.
Sorry.
Oh.
So really, yeah, I just want to leave you with that message that our aim is really to be the trusted third party within your fund structure, and that's it. Yep. Thank you very much. Over to you, Derek.
Thanks, Julio. Okay, I'll start by saying, I'm sure most of you, even on a personal capacity, have had your different nightmares with banks. We've all, we've heard some horrendous stories of people sending crypto to a bank and having their account closed, and all these different horrendous stories. So I think one of the most important things really for a fund is to make sure, it's a business, to make sure that you have a partner there which will be there for the rest of the fund life, really. The fiat rails to receive subscriptions and make sure you can process any redemptions or whatever are very important. So I think that's where it's very important to select the right bank. So, most of you won't know Toricon Bank. We are a small Gibraltar bank. So we are Gibraltar licensed. Again, that's one of the big advantages of having a fund banked with us. We have the same regulator as these funds. So we've been around already for 30 years. This is actually our 30-year anniversary. There's about just over 80 employees at the moment in the bank. And we are a fully fledged bank. It's not only that we do obviously funds. We have a full brokerage, depository services, payments, credit cards. Anything really a normal or fully fledged bank can do. So our most important thing is that we're a niche bank. So we have time really to spend with clients. So as I mentioned before, we are licensed to provide banking and depository services to Expedient investor funds. We also have an AFM license, so we could tackle any of those types of accounts. as Julian and Jay has mentioned, I mean, at the moment, it's the experienced investor funds and private funds, which are the flavor of the day. I mean, most of the fund structures are structuring themselves via these regimes. We have a team of 5 actually who actually deal with funds. I mean, personally, I'm also in the executive of the Gibraltar Fund Association. So again, we have a thorough understanding of the markets, and we are currently appointed bankers to over 30 funds. Most of them, as I mentioned, is crypto. I mean, we've had quite a big influx of crypto funds in this last couple of years. And even now, I mean, we're still opening quite a few crypto funds on a weekly basis. We not only have crypto funds, we also have traditional funds, we have private equity funds. But as I mentioned before, crypto funds is what's coming in at the moment. What's our experience in the crypto space? I mean, how come a small or smaller bank really has got the expertise in crypto? I mean, we've been in crypto since 2017. At the time, Gibraltar decided or started stating that we would be having the DLT regulations in place, and obviously it started attracting people in the crypto space. We as a bank started to be approached by the service providers. So, I mean, lawyers mainly, where we're getting inquiries on crypto. So they started coming to us. I mean, I used to work for another big bank here in Gibraltar in the fund space. So, I mean, these service providers were mostly, I mean, friends of mine, and they were in the fund space. So they started coming to us saying, look, Derek, I mean, we have this new type of business coming to Gibraltar. Do you reckon that Tourism Bank could start to bank these? Obviously, at the time, 2017, crypto was fairly new, so it needed quite a lot of having a look at what it was. I mean, when at the time, I remember I Googled Bitcoin, and all you could see was Google adverts on spams here and spams there, and people saying this is a complete scam. So again, I mean, for us as a bank, I mean, it was an area where initially we thought it was something we couldn't be able to actually process. But then, I mean, we started looking at it with compliance and starting to break down what crypto actually was, and there were ways of actually looking at the source of wealth. So in the end, I mean, we got our internal compliance issues out of the way, and we started having our own procedures of what we could onboard and what we couldn't. And at the moment, I mean, our client base are some crypto exchanges, OTC brokers. We have trading companies, individuals, corporate banks. I mean, private banking. I mean, individuals who've made their wealth in crypto. I mean, some of them 2015 investors in Bitcoin, so pretty wealthy, I would say. We did a few ICOs, and obviously now we are seeing a lot of crypto funds. So it's a natural, really, home for these crypto funds, because we actually understand crypto and where we're coming from. So I mean, in Tourism Bank, I mean, what do we do really? I mean, it's not easy from a bank point of view, as I mentioned before, to onboard a crypto fund. I mean, if you look at the onboarding, for example, as Julian mentioned before, I mean, funds are usually complex structures. I mean, now we have limited partnerships and general partners involved. So it's not as easy as just getting an account opening form, completing 3 or 4 lines, and you've got the account open. I mean, there's a lot of documentation that our compliance at the bank have got to actually check also. I mean, again, I mean, you have the typical things that you would get from or pushback you get from other banks. I mean, the founders are usually related to crypto firms. The source of wealth from investors can be derived from crypto. You do get in specie investments. I mean, you have to make payments to crypto exchanges. So in most cases, crypto is a no-go for banks, I would say. I mean, I've spoken to colleagues within the banking industry, and it takes a while for them to understand how we can actually provide these type of services. But I would say the most important thing is that, I mean, myself and other members of the team, I mean, we've gone down the rabbit hole. We understand the markets. So we've been able to actually sit with our compliance teams and explain to them what crypto is, how we can assist them in actually providing everything to make crypto fully compliant. I mean, obviously we have very high standards of KYC, of AML. So I mean, it is a very important part. But I mean, we are small. I mean, we're a niche player, so for us, really, it's a question of making it work, and I mean, and looking at ways that we can help the founders of these firms. I mean, we provide really, I mean, private banking services to crypto funds. I mean, once you open a fund, I mean, similar to what Julian is saying, I mean, most of the founders or the sponsors of these funds, I mean, they keep on messaging me. We create a relationship, so it's an ongoing relationship. It's not something that you just open a bank account and you just any old number in the bank and that's it really. I mean, you do create a relationship. I mean, it's not an easy account because obviously there's always issues. I mean, even this year, I mean, you've all seen Silvergate, Signature Bank, the issues that banking has really with crypto. I mean, we do offer multi-currency accounts, so from that sense, we are a bit. It's a big advantage. I mean, our two main service providers in US dollars. I mean, one of them was using Silvergate, the other one was using Signature Bank. So for a little while, we didn't have any US dollar rails. Again, I mean, we always try to keep 2 or 3 rails open. In this case, the 2 of them that we had basically were closed down. So, but still, I mean, we were able to offer the rails into the exchanges. I mean, we still offer the euro and sterling, and now we are back again with another couple of US dollar providers. So we spend a lot of time as a bank, I mean, making sure that the pipelines are available for clients. I mean, as Julian mentioned before also, I mean, and Jay, I mean, we are involved in calls with the founders of the sponsors of each one of these funds at a very early stage. It's important to understand also the jurisdictions that the investors are coming from. I mean, we can provide crypto rails and the payment rails for clients, but you never know what's happening on the other side of the investment. So, I mean, you can have a subscriber from a country which, as from experience, we will know that they are going to have issues with sending payments to us. So again, I mean, it's important to be transparent from a very early stage. I mean, look at jurisdictions where the money is coming from also. From a sense of setting up a fund, I mean, as Jay mentioned before, I mean, I think the time to market really is really important. I mean, we understand that it usually takes about 3 or 4 weeks for a fund to actually be opened here with us. So from the time when we do get all the paperwork, it usually takes 3 or 4 weeks, and the account is actually open. You have an IBAN number, so you can start receiving subscriptions. I think it takes, I mean, a lot of resources to get this done, but we've now have experience with quite a number of funds. If there's any issues at all, I mean, we have Julian's team, Jay's team. We work together as a team really to make sure that everything is sorted out. And we know the do's and don'ts. I mean, again, I mean, we understand what crypto exchanges will ask from you. I mean, we can guide you to what you need on there. And also from the investor side, I mean, we understand what investors we can onboard, which ones you cannot. So it's, I mean, we can move with you really. Again, I mean, a lot of the crypto founders end up opening private accounts for themselves. I mean, we do also have that. Some of their investors even I mean, if it's a big enough investor, sometimes they open private accounts with us. So again, I mean, banking is never easy for crypto, but we are here to assist really. And that's it really. I mean, again, crypto for us, I mean, we're just providing the fiat rails. I mean, we don't do any crypto ourselves. But it's very important, I think, that you have the right choice of bank.
Okay, so thank you so much for that. I think that we have to move on to our next session, which is the last session.
One more session to go for today. As Denise mentioned, we're just going to get the next speakers in. We are a little bit over time, 15 minutes or so. So again, apologies about the questions, but I think some of those are being answered in chat. And we'll continue to pass everything on to the speakers. Our last session for the day, but definitely not the least, is our DAO panel. We've got joining us will be Lloyd DiVincenzi, Senior Consultant for XREG Consulting, Jim Neve, Director and Seed Investor, Karen Aswani, CLO for Gnosis and Consultant for Isolus LLP. Our theme for the last session will be to discover the future of decentralized autonomous organizations, or DAOs, in an engaging panel discussion that brings together experts and thought leaders at the forefront of this innovative movement. Join us as we explore the potential, challenges, and implications of DAOs in reshaping traditional governance structures. I'll hand over to Denise and welcome to all of our speakers.
Okay.
Jay.
Yes, Jay. Over to you.
I'll hand over to Jay.
No problem. Thanks, Mark. Thanks, Denise. So I'm afraid you're stuck with me again. So I'm going to hand over very quickly to the panelists to introduce themselves. So who wants to go first? Karen, perhaps?
Yeah, sure. Thanks, Jay. So my name's Karen Aswani. I am the Chief Legal Officer at Gnosis, a blockchain infrastructure provider, and formerly worked at Isolus for many years, where I contributed probably since 2016 to the growth of the DLT space here in Gibraltar. And I still remain as a consultant with them and help out on various matters from time to time.
Jim, do you want to jump in next?
Yeah, sure. Sorry. Hi, I'm Jim Neve. I had an investment banking career in Citibank in Germany and London. I've been acting as a director in Gibraltar for the last 12 years. 5 years ago, my interest in the digital asset space was gendered by a diploma in the blockchain and smart contracts at Gibraltar University. So shout out to them. And I've been involved in a number of projects as an investor and a director. And in particular, I think I'm here because I'm involved in a Web3 DAO experience space.
Thank you. And last but not least, Lloyd.
Jay, everyone, hi. Lloyd DeVincenzi, consultant at XReg Consulting, specialized in the crypto asset to regulatory consultancy space. And my own sort of specialism since joining has been how that space is developing in Europe, and in particular in the EEA countries. So a particular focus on the markets and crypto assets regulation, which many of you will know is about 2.5 weeks away from coming into force, although of course most people won't be affected by it till for another year or so after that, and 18 months if you're a CASP. So that's a bit about me. My background is in the law. I'm a lawyer by training and background, also public policy in GIB and Canada and internationally.
Thank you. So we have three lawyers three lawyers taking part in this session for an area where there's not much law to surround it. And I think perhaps if we just kick off by, for perhaps the listeners who may not be very familiar with exactly what a DAO is, would one of you like to describe in your own words what you believe is a DAO? What are the core principles and characteristics?
I'm happy to take that.
Go.
In very, very simple terms, I would say a DAO is a blockchain native organization formed by a group of like-minded individuals who share a common purpose and devote common resources to achieve those purposes. They tend to be governed by code, which means their governance principles, voting mechanisms, and execution of proposals are generally encoded in the form of a smart contract, which you could call a form of constitution. And those have different levels of complexity depending on the number of members of the DAO, and they evolve over time as the DAO increases to accommodate more members and serve different use cases. So that's a very, very high level summary, but I'm sure we can go into a lot more detail over the course of this session.
Yeah, I think to borrow a term from Tommy earlier, where he said the builders, I think people in this space are very motivated by their themes. So the original team, and they're very cognizant and aware of social media. So very early on, they build a very strong community spirit. And I think a DAO lends the architecture of a DAO through the discussions, the moderation of the discussions to votes framed by a constitution, builds that community even stronger. And that's my experience of a Web3 gaming DAO. It's all about community, testing the popularity of proposals, discussions, and using that architecture for the benefit of the token holders. It's very empowering. That's where I see it. Community to the next level. And I think that a lot of real world companies, when they see the power of that, will start to adopt some of the aspects of a DAO in the future.
Lloyd, do you want to add
Yeah,
anything?
very quickly, I'd certainly agree with all of that. And picking up on one of Jim's themes, I think, the scale of participation that DAOs could offer is something probably unique. And if we look at something like City DAO, which is bought famously about 40 or 400, I think it's 40 acres in Wyoming. That started through traditional message board, and its geographical scope was enormous. I mean, from US itself to Germany and other places where like-minded people have decided on this particular objective. So this is an investment objective, clearly. But I think we're also, again, experimenting with this kind of community and decentralized, to use that term which we can't avoid, and mass participatory organization toward a common goal. And I think they're feeling their way through that in many ways. And I'm sure many of them are thinking, have I bought some bit of code, or do I own a piece of land or rights over land or whatever? But that's all being kind of figured out through an LLC, etc. But again, this is where the space gets very interesting, I think, in terms of mass participation and scale.
Thanks, Lloyd, for using the word decentralization, because it's the next thing that I wanted to pick up on. So we've spoken a little bit about community. What would the panelists say are, in your opinion, the main advantages of implementing a DAO compared to a traditional centralized organization? And I know, Jim, you expressed some views in your summary there. What's wrong with that first?
Me too. Well, there are a lot of work. So I think, again, it's for people that create a DAO, they're a very motivated bunch of people in their subject. And I think it's right that people are learning as they go with some of these things. You don't get a brilliant constitution day one. You might have to work on it over time. And some of the failures you make might make you strengthen it, etc. But I think it's just the empowerment of the token holders to raise discussions, question decisions. That purely, it's not like a modern day company which has layers of management and project groups and discussion groups and or shareholders meeting that people don't turn up to. It's a totally different architecture that comes at it from the other way. And I think the power of that will be realized by the Apples of this world in the future as well. So I just see that. It's very simply that for me.
Again, I'd agree. I mean, and I think, again, the advantages are being seen, and some of them are yet to be seen in their fullness. But certainly, when we're speaking about decentralization, again, the idea of scale, the idea of decisions that can be made amongst equals, essentially. And of course, a DAO typically, it'll have its founders typically, but it won't have a CEO, or they'll in effect fade into the background, or should fade into the background. That's the advantage. I will say, and I think it's an advantage, I guess it depends a little bit on your point of view, but there is, I think, a clear need for the smart contracts, which we can get into a whole discussion around that, but the code that executes and operationalizes decisions has to really reflect that will. And I think if certainly right now, if there are clear objectives, say investment objectives in the case of a DAO that has an investment sort of profile, then I think decentralization is you can harness decentralization because you're looking at people from, again, around the world or a big geographical area who are working in a non-hierarchical structure with a clear aim. But and I think that's the advantage. I mean, I guess we've spoken about it in different ways, but I think it's again very important that coupled with that is that the smart contract reflect that will, which isn't necessarily an easy task.
Thank you.
Yeah, I would echo the messages. I think in another way of kind of saying the same thing is it democratizes the corporate governance processes within organizations. So it removes this hierarchical authoritarian structure and empowers, I guess, the community and different stakeholders to all benefit from the operations of that DAO. So it changes the mindset on pursuing a purpose for the benefit of shareholders, but rather creates a circular economy where any contributor or any stakeholder who adds value to the ecosystem has an equal right to participate and an equal right to benefit.
So I think Jim mentioned the constitution of a DAO and making changes as you go along. And we've spoken a little bit about the participants having a fair say. For our listeners that perhaps are less familiar with how the governance structure of a DAO works, would one of you like to explain what mechanisms or protocols are used to facilitate the decision making, and perhaps even to resolve conflicts within the organization?
Happy to give some examples. So I think there's different DAOs with different operating models and different governance structures, which reflects in the way that their constitutions are formed and documented. Some will have documented participation agreements of some sort. Others will be completely set out within the code of the underlying smart contracts, which governs how voting and decisions are made. And this can be based on one token, one vote. It can be based on reputational voting. It can be based on quadratic voting. There's lots of different models that are emerging and lots of different experiments on what is the best way to organize a collective group of individuals who share a common purpose. I mean, there's lots of different protocols that are being used today. I think it starts from as simple as a Discord server where people have a group chat, to discourse, which is used for voting and snapshot proposals, where people can signal their vote. Then there's tools that enable automatic execution of those votes on chain, which has been a tricky thing that many groups have been struggling with, is how do you, on the one hand, reduce like the gas costs associated with on-chain voting, to encourage user participation so it doesn't become prohibitively expensive for users to be able to cast votes, but at the same time ensure that decisions are automatically executed on an on-chain level. And this is where tools like Snapshot, together with the reality module, which is actually a product that was built by one of the Gnosis teams to facilitate on-chain execution of votes. Then there's also kind of the treasury management side, which in and of itself is probably the most core aspect of how DAOs manage their affairs and deploy their resources. And I think most DAOs today will tell you that they tend to use a safe, or the Gnosis safe, which is a multi-sig wallet, where there's different signers who have the right to make transactions. That obviously also creates points of centralization, which is why it's so important to be able to automate decisions through things like Snapshot and the reality module, so that it doesn't seem like any one group of individuals have control over how that treasury is used, which can also have implications from a regulatory perspective to bring arguments around whether they're acting as custodians. So I think that's still an ongoing experiment. There's loads of different tools and protocols. There's loads of different chains as well. Some DAOs are deployed on Ethereum, others are using other cheaper alternatives. So I don't think there is a kind of one size fits all. It very much depends on how big the DAO is, what its purpose is, how the different members choose to organize themselves and participate, and the different tools that are at their disposal.
Yeah, I think I would add as an example, a Brexit outcome vote for a DAO would be an absolute disaster. So its constitution and its moderation and architecture has to, protect against something like that that's not thought about. And or you've also got to consider that there can be militants in your token holder group who can cause an awful lot of trouble if allowed to. So within those two, you sort of need to frame something that's for the good of all, really. And I think the other thing I would like to say is that the initial team of advisors are very much the steer of the ship. And you really want them to be leading a lot of the framework and all the discussions, or some of the heavier token holders to be doing the same. So there are controls and checks and balances that make sure the ship sails in the right direction while it's to some degree decentralized.
Just to again pick up on well, both comments, and Jim's in particular, with respect to, I think, the need that everyone recognizes that at some point at the beginning, and possibly during the life of the DAO, some degree of decision making might have to be done by a group, right? But as long as everyone was happy with that at the beginning, or as things emerge, that's fine. And in that sense, there's an analogy with just any human organization, any structure. I mean, you need human agency, you need decisions to be made. Sometimes you need those decisions to be made quickly. That has to be thought through. There's no avoiding thinking these things through. And of course, if the larger the group gets, then the more personalities you'll get, and the more you'll need to structure things, perhaps in a way that allows conflicts to be resolved and decisions to be executed. But there's no avoiding that, and I think it would be naive for anybody to think that that can be completely avoided in any human endeavor. So.
Yeah, I mean, the proposal and voting mechanism and how it works always tends to be one of the tricky elements, in particular, of setting up a DAO. If any of our speakers were looking at the moment to set up their own DAO and to create their own community, in particular where that community can be spread across the globe, from your own experiences, what do you think the DAO and its initial participants, what can they do to foster the collaboration amongst the token holders to essentially try and make sure that the DAO is as successful as possible?
I think the decision to form a DAO initially needs to come from a already established community. I don't think you can start a DAO without having people who are willing to, off the get-go, be willing to participate and contribute. So I think one of the key things is to make sure whatever it is the purpose of that DAO is, has sufficient support. So in the case of a protocol DAO, for example, that protocol needs to have sufficient product market fit. There need to be developers, there need to be investors, there need to be researchers, there need to be different stakeholders and service providers who, when the DAO is launched, will all want to have a voice and will therefore be willing to participate. And the tricky thing is, how do you set down a constitution that people will agree with and that will be respected by the different members? And we've seen recently, in the case of Arbitrum, actually, how they made a big mess of it, because one of the first proposals to actually lay down the constitution was overwhelmingly voted by the DevCo, which didn't really take into account the views of the rest of the community, and they had to quickly backtrack on how they wanted that DAO to be set up. So it's a very tricky answer, but I think one of the most important things to do is to hear what the other members of your ecosystem are saying, what they want, and what would be a fair mechanism to enable everyone to participate and ensure that their voice is not being drowned out by founders or other large stakeholders of the community.
Yeah, I totally agree with that. I think that's well said. I think the DAO that I experienced, the time and effort that the core team put into the various social media platforms is incredible. I've not seen that in any other old world style organization. And I think that's very true of this space, where you've got the good actors who are passionate builders, to use the term from Tommy again. The DAO in the wrong hands wouldn't go very far. would die a death of boredom, I think. So you need passionate people behind it at the beginning, and you need, as Karen just said, the community to start with.
Yeah, certainly from my perspective, nothing to add particularly, but yes, that high degree of consensus, I think, if that can be achieved early on, and again, that's really a matter of working with like-minded people toward a common goal. I think you'll naturally attract people, who are motivated and who want to, in a sense, get along. But again, you need these mechanisms to resolve the difficulties. But beyond that, I think a DAO remains a remarkable vehicle or potential vehicle for executing their desires and their, again, investment goals or other goals. I mean, we haven't obviously gotten into things like DAOs for political participation, although there's been those to fund, for example, efforts to help Ukraine, etc. But so clearly, again, different people will be motivated in different ways, and that degree of motivation and consensus will help bring things together.
Thank you. So we've spoken quite positively about DAOs, but obviously they don't come without their issues, as we've all probably experienced. What would you say are the potential challenges or risks associated with operating a DAO, and how do you think those could be best mitigated? If we can share our own experiences, that'd be good.
I'm happy to jump in quickly, just because one thing I've been thinking about recently, and not least for this panel, was when we speak about decentralization as something that's both a characteristic and kind of a goal of DAOs by definition. I think sometimes decentralization and delocalization get conflated. So I think for those maybe not experienced, and not this panel or the listeners, but others out there perhaps who are thinking about a DAO and what it can do and what it can achieve, and are thinking about some kind of private system that is autonomous, again, as the name suggests. I mean, yes, you can absolutely, the potential to achieve that is there. But I think when we think of decentralization, again, we shouldn't think of delocalization necessarily, because there are regimes, legal regimes, regulatory regimes out there that even now, even before the development of the law in these areas, can impinge upon the DAO. And so that's not necessarily a disadvantage, because like anything, you might be a member who might want to exercise certain rights because you're linked to a particular jurisdiction. You think you should be able to exercise those rights if, God forbid, something goes wrong with how you participate in the DAO. But I think, people, so that's you could say on the positive side of being localized or having a link, whether you realize it or not, because of the activities of the DAO or where the membership is or where the majority of the membership is. These are all things, again, that aren't necessarily disadvantages. They can be advantages, but they're real. And we've seen that, and we've seen today or toward the end of last week, certainly the news has been hitting the headlines today in terms of Uki. Maybe I shouldn't mention the name, but it's out there anyway. The CFTC, for example, looking at sometimes the liabilities that members or founders can have. That's not a disadvantage necessarily, but I think people should be aware that there are these sort of touch points with a kind of other reality, that a kind of legal and material reality, if I can put it that way, that again can be an advantage or a disadvantage, but it's out there already. I guess is my point.
Yeah, I think that's right. I think because there's so much uncertainty in the crypto regulation space, I think that is going to reflect in DAOs. So there's no certainty there as to what the touch points will be, case by case, I would guess. But remember that, I guess, look, DAOs need people to do things, to pay rental contracts and to employ people and et cetera, get people to design Web3 projects. So, it's not in the ether. It's just an architecture that enables you to build a community fast and furious. And I think, again, I can only speak for the one I'm involved with. And I think that DAO would welcome regulation tomorrow if it was sensible. I don't see why anybody in the space shouldn't. But it's probably going to, the DAO will be looked at at some point, like anything in crypto, because it doesn't quite fit the norm at the moment.
A couple of challenges that I've seen in various DAOs is community engagement and voter apathy. So many DAOs will have many members, but when you look at proposals that go for voting, you'll only have a very small fraction of those who actually participate. So how do you build the right incentives to make sure that the community's voice is being properly heard and that you're actually getting the views of all of your stakeholders, rather than just a minority who may be interested in a particular proposal? But then on the flip side of that, there's also a question of, should every member of the DAO be voting on every single proposal? And should you instead be entrusting decisions on certain matters to those who are subject matter experts? And this is where the question of kind of sub-DAOs or delegated committees comes into play. And we're starting to see that if you look at the way that MakerDAO is formed, and it's divided into core units who are given a lot of autonomy over how they manage various areas of the entire Maker operation. That could be a solution. And there you make sure the right people are making the right decisions for the benefit of the community as a whole. And because they have a direct vested interest in those specific matters, they're more likely to participate, and you're not going to have things like voter apathy. So those are some of the challenges that I've seen, but by no means are the only ones. There's many others when it comes to general governance and participation in DAO decision making.
Maybe I'll add, though it's not my area, but just from speaking to people in the tech area, I think, like anything or any area where technology is involved, and this is an area of emerging technology, very powerful technology to be sure, unless you yourself are a coder, you don't know whether the founders have created a backdoor so that even though they're meant to fade into the background if things get going and more or less be equal with everyone else, perhaps they're not, and that could be inadvertent as well because of poor programming, I suppose, or a poor code potentially. But these things again are real. It's not a disadvantage that's inherent to a DAO. It's just the fact that we're dealing with technology where, unless you're technological yourself, you may think, well, this is all very new stuff that always works, and you may be unaware of the risks in that area.
I think that one of the key words in a DAO is transparency. So very early on, your GitHub and you're stating how the platform has been audited and who did it and all these sorts of checks and balances. So I think that's there, but it doesn't mean that there are cleverer people able to hack things. Yeah.
Thanks a lot. I'm a little bit conscious of the time. I think we've seriously overrun. I'd just like to finish off with a point that was made initially, which was the future of DAOs and developments and trends. What do you guys foresee? What do you think will be the main use of DAOs going forward? How do you think they'll evolve? Any particular industries that you think will be positively or negatively impacted in the next few years?
Well, certainly Web3 gaming, because gamers are collective enthusiasts. They play together, they compete together. So it's a small step for them to do social media together, to share beta tests and points on how to do these things, and then to get involved in should we invest in project A, B, or C. So I think something like that is a natural to use the architecture of a DAO. But I have a limited experience of other uses.
I'd see certainly hybrid. So I'm not going to speak so much to different areas where this will grow, because I think it'll grow in many areas. But I think we'll see a kind of corporate DAO hybrid. Maybe we're seeing that already in a sense as that emerges. I suppose maybe I will go out on a limb in terms of areas, and again maybe go back to even beyond business areas, where I think there's some interesting developments in civic participation, civil participation, so even beyond business. Obviously, we're in a business environment, and this is a business talk. But just to say, to give that sort of wider landscape, I think, or to point to it, I think there's some interesting experiments that have been done and can continue there in terms of our democratic participation as citizens.
In my view, I don't think we need to kind of define what are the appropriate use cases. I think DAOs could potentially serve any use case as long as the right framework is put in place for the specific purpose. So a DAO that a protocol DAO is going to be very different from a social DAO to the Links DAO, which is a collective group that have bought a golf course and are designing their own golf course. So there's very different purposes for different DAOs, and I don't think you can say that any one particular use case is more suited than the other. I think it's all about making sure that the right framework is in place to give everyone who's a stakeholder or a member the ability to participate. And I think we're still in a period of experimentation, and we'll see what are the more successful use cases and how they've been structured. And we'll see others that will inevitably fall away because they don't have the community engagement or people get disinterested, and then new models will emerge. So I think a DAO could potentially be used for anything, but not everything will be successful as a DAO.
Well said.
Thank you very much. Thank you to the three panelists. Denise, over to you.
Yes, first of all, I'm going to apologize for the crazy slideshow that we've had throughout the afternoon. It wasn't me, it was the slides. Thank you so much to all our speakers. That's the first thing I want to say. And obviously to everybody who's participated. It was a very long session today, but luckily we've still got quite a lot of few things came up, and I'm just going to conclude the session by saying, if you are a startup, you have a project, a fund, investment in crypto, the key takeaway I took today is choose the right jurisdiction for safety, regulation, expertise, and the benefits that can bring for the success and longevity of your projects, funds, startups. So with that, again, thank you to everybody who's participated, and I'm sure we will have a lot more to talk about in future. Thank you very much.
Thank you.
Thanks, Denise. Bye.